Welcome back. I'm Pratap here. Today is 14th January 2025. In this video, I'm going to analyze NIFTY 50 because none of the HLQ zones are executed today. So that's why I'm going to focus on NIFTY 50 analysis. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars, and we are providing complete free training. And you can access all the training lessons at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community, so click on the Community tab. You get access to this free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into supply demand zone price action course. All training lessons are kept in this playlist. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So please join at our Telegram channel. It will be helpful to you. Each time when we release a new video or any other very important updates, we will be providing at our Telegram channel. Now let's get into the analysis of NIFTY 50. Before that, yesterday we identified 13 high liquidity zones from daily and 75 minutes time frame. Prices did not enter into any one of those zones. So that's why I'm not focusing on HLQ zone analysis anymore. Instead, let us focus on NIFTY 50 analysis because some interesting observations we can make. Even already I sent a message in our yesterday's Telegram channel. In our Telegram channel, yesterday I sent the message. Now NIFTY is about to complete or on the way of completing its overextension, price overextension. So first let's go to the monthly time frame. So this is a NIFTY monthly chart. Monthly chart, we have a rally candle, 1, 2, 3, 4, 5 base candles and a rally candle, failed ERC candle. But this is a rally candle from the dynamic viewpoint of view, and moreover the entire body of the candle is completely came out of the zone. Even partially is also okay, but completely. So it's a good sign. This is a ERC candle, it's a big candle. And even our software also suggested, see here, first 12/2023 is the leg-in. After that, 5 base candles. 3rd January, that is 3rd June 2024. That is a June candle, monthly candle. See here, 1st December, 1, 2, 3, 4, 5 base candles. And this is the June monthly candle. So let's draw the monthly zone. Monthly demand zone. Is it having any monthly supply zone? No. So it's a all-time high monthly demand zone. Have you noticed this monthly demand zone is having a monthly EMA confluence? Earlier prices were overextended from the monthly zone. See, all these months overextension continued. And here overextension is stopped. And now prices are moving towards the monthly zone. This month prices just touched the monthly zone. There are several possibilities. From here again it will move up, or it will come near the EMA confluence, it will move up, or prices may move a little below the EMA confluence and again it might be moving up. Anything will happen. If the market is worst, that scenario also we have to analyze, right? If market is worst, then this monthly zone will be violated and moving towards its next monthly demand zone. We have a pierced monthly demand zone is available, 3/5/2021, 2 base candles. So somewhere here, even below, this is the one. But it's very, very far away. So this is the area, there are higher chances Nifty may turn from here. Generally, how the market behaves. Market creates a panic in the investors. When investors are panic, what they do? Huge amount of the shares they will be selling. And that is the time institutions will be buying. That is the way they get the liquidity. And at that time, the crash will stop. And after that, the slowly market will be moving up. Now again, investors, because market is moving, once again they will enter into the market. And then rally will continue. This kind of behavior you will be observing every time. Last time also I have seen 2 years back in the month of October, downfall started in Nifty continued for about 9 months or 10 months. Same behavior I have seen even before that, the COVID period, also the same behavior. When the panic goes to the peak stage, at the time institutions will do a lot of buying activity. And many times when such kind of situation is arising, especially in the Nifty index, mostly at the time Nifty will reach to its monthly zone. At the time the overextension will be completed. At the time mostly the zones will be having EMA confluence. Because the overextension is completed, prices should get into the EMA. The EMA 20 line it should reach. Most of the time the EMA will be having some zone confluence with a monthly demand zone. By the time prices reaches to that EMA, the overextension will be completed. See here, previously when the overextensions are completed, see here, monthly is Nifty is respecting the monthly EMA candle. See, this is the month I was referring, October month, 2022 October month. Not 2022, I think it is October, this is the month, 21 October month, I referred earlier. There was a overextension, see, Nifty, overextension from the monthly EMA. And here market was started moving down and again down, sometime moved up and again came down, further moved up, once again it came. Now it reached the EMA, complete overextension is done by the time. See, sometimes prices will be moving little below the EMA line and then started moving up. Or exactly it will touch EMA and started moving up. See, this is when was the last time? 1st March 2023 was the last time prices reached the EMA line. Now this is the 2025 January, almost close to 2 years. After 2 years, prices were about to reach. Is it going to complete immediately or is it going to take some time? Maybe. It may be. Maybe after 2 weeks or 3 weeks, it may reach up to this level. Before that, some extent prices may move and again sharply it will come down. People will panic. And here, somewhere here, before that, institutions may create a zone and that zone may give you a support. If not, prices will be further coming down. In this existing area, some newly created order flows might be there already in the past. Those order flows will be executed and they will be moving up. We will discuss all these possibilities in this analysis, because understanding the behavior of the market is essential for all the traders. Okay, prices came to a demand zone, you are buying. prices came to a supply zone, you are booking the profit or you are going for a short trades. That kind of learning is over. You have already learned enough all these days. Of course, newly joined members, they will be focusing on the learning. But those people who completed all the training lessons, at least up to lesson 20, now it is the time for you to understand the real behavior of the market, the mindsets of the institutions. So that's why whatever the observations I made for the last 20 years when I am looking into this, observing this NIFTY, what kind of behaviors I've been observing, because I have seen how the market behaves. Let me tell you a few scenarios. When institutions want a big liquidity, you know what happens? Televisions will create a huge noise. They say market is going down and they create a lot of panic. But remember, you people are not the normal traders. You are supply demand zone traders. You are learning this concept to understand the mindsets of the institutions. That's why always you all should feel you are special traders. We won't get panic. We never get into the panic situations. That kind of mindset we have to fix. When it is possible, when you start believing you are not a normal trader, you have to start believing you are a supply demand zone trader. You are a trader finding institutional order flows. And you are nowhere inferior, you are superior. This is the way we all should feel. Then we will try to understand the reality in the market. So the moment televisions or some of the YouTubers, when they will be creating the noise. Why they will be creating the noise? Who knows? Many of them might be having association with some large institutions. They have to talk in favor of them. When a large institution means it could be a mutual fund or it could be a foreign institution, when they want to invest a huge amount of money, or when they want to exit from the market, already they invested huge amount of money. So they need a lot of liquidity in the market. Liquidity, how we will get? Because most of the people listen the videos or televisions or maybe newspapers. That way they will be reacting based on the news. And all the news channels or maybe the newspapers, probably they will be passing a huge news into the market, negative news. A news that creates a panic. They will be telling, no, this is the time, start selling whatever you have, everything you sell. That is the way people will be telling. Market is falling heavily. Whatever you have, everything you sell, exit from the market. Once market reverse, then you will enter. That kind of news you might be listening. Do you need to believe all those news? No. We will be looking at our charts. We will be seeing as per, because we should not afraid. Why we should not afraid? We have a strong reason. What is the strong reason? Risk management. Because it is such an important, I introduced risk management during our phase 1 training itself. I think in lesson, if I am not wrong, lesson 5, you learned risk management. So very early I introduced so that you all understand. We are doing our trades based on the risk management. Because we are properly analyzing, sometimes our analysis also might be wrong sometimes. Even if our analysis goes wrong, with a very minimal or negligible loss, we will exit out of the trades. So that way always we are in safe. So that is the reason why we won't get panic when something is happening in the market. We stick to our fundamentals. So exactly the same way now we are assessing by seeing the fast history of the NIFTY. Every time it reaches the EMA line, then it will be started moving up. See, prices were coming down again, a little below EMA, started moving. Exactly from EMA, monthly EMA, they were started moving. Once again from monthly EMA, they were started moving. Again monthly EMA, they were started moving. This is the time you have seen the COVID. Sharply prices came in 1 month, then immediately again they were started moving. It won't stay for a long period below the EMA line. Then again see market how sharply moved. The more and more prices come below the EMA line, that much fast prices are moving up and then moving away from the EMA line. And this is the one I was talking. This is the October 2021. The prices were moving slowly. Finally, the overextension is completed. Overextension completes in 2 ways. That is what you learned in our price overextension lesson. I didn't remember the lesson number, maybe 17 or 18 or 19. One of these lessons you learned. Maybe lesson 17 or 18. Yeah, one of those lessons you learned. Overextensions will be completed in 2 ways. What is the first way? Prices sharply come down. This is what happening. And finally, the overextension will be completed. What is the second way? A lot of time prices will be moving in a narrow range moving. Prices are falling down, but they are not sharply falling down. They are moving in a narrow range, going up, down. So maintaining some kind of sideways movement for a long period. That way, overextension will be completed. By the time prices, EMA will be moving up, reaches that narrow range area, then the momentum will start in the market, then sharply prices will be moving up. Again, prices will be overextended. See here, overextension completed. But this time, did you observe? Prices were not moving in narrow range. They sharply came down. And finally, maybe this month or in the coming month, we don't know the remaining time, how much time it will take, because sometimes prices will again move and come down. Anything will happen. But one thing we observed now prices entered into the monthly zone. Most of the time from monthly zone, Nifty will be moving up. Sometimes prices reach near the distal line of the monthly zone and then they will be started moving up. Anything will happen. But this is the time we should look for the opportunities. And most of the swing traders, MIT traders, will get a huge opportunities. Or even WIT traders, weekly income traders. Or even quarterly income traders, QIT traders. They all get huge trade opportunities once prices are entering. And also remember, this is also a quarterly zone. Let me show you the quarterly chart. So here you have a rally, base, rally and follow through candle. So the quarterly zone is exactly having confluence with monthly zone. Monthly zone is bigger than quarterly zone here. Maybe, you may say, maybe I consider even second candle is also base. Then monthly zone will be much bigger than the, quarterly zone will be bigger than monthly zone. Anyway, we focus from monthly onwards. Let us don't get more time frames. So overextension is not yet completed. It is about to complete. Maybe it may take a few days time or few weeks time, or maybe next month before completion of this overextension. See, there is no rule that price exactly reach this EMA line. Sometime before EMA line they will be started moving up. Exactly from EMA line it will started moving up. Or prices come a little below the EMA line and then they will be started moving up. Anything will happen. There is no ground rule that exactly it should reach EMA. There is no such rule. But somewhere near to the EMA line prices will reach and then they will be started moving up. That way we have to say overextension is completed. And most importantly, at the time overextension is getting completed, there we have a zone, monthly zone. Now we have to analyze this monthly zone further. So let's go to the weekly time, but before going to the weekly time, let me draw the horizontal line at EMA so that we know where exactly the monthly EMA is there at this point of time. So here we have monthly EMA. Let me add a text also for this EMA so that we remember this is a monthly EMA. See, I have given a label monthly EMA 20. Okay, this is about monthly time frame. Now let's get into the weekly time frame. Weekly overextension is already completed. Now weekly, probably the sideways maybe kind of movement is there in the weekly. Slowly weekly downtrend also may continue further. Possibility is there. So downwards overextension you may see. That possibility is there. Once monthly overextension is completed, then the downward overextension will complete some movement for few days, then again upward overextension will come. This is the behavior of any kind of market. Because here now the importance is for the monthly time frame, not the weekly. Weekly only plays supporting role now because prices reached into the monthly zone. Okay, where do we have the weekly zones? Here we have a weekly zone base rally, but this is already pierced. This weekly zone. Okay, what our software is telling? Let me generate the weekly supply demand zone chain. Okay, this is the weekly supply demand zone chain. We are already having one weekly zone here. This is a high liquidity weekly zone. This is a high liquidity zone. This weekly zone. 39-20-24. Why? The advantage of looking into these software reports is we know about high liquidity zones. So when it is, this is on 39-20-24 after the two base candles. 39. So sorry, I'm looking into the supply zones. I have to look into the demand zones, but anyway, supply zone is also important. The first one is 39-20-24. This is the one. This is a high liquidity zone. That's why already this zone is tested multiple times. This is the first test and this is the second test. Anyway, my focus is mostly on the demand zones. I just mark, sorry, this is a weekly supply zone. For your reference, let me add a text also here. This is a HLQ's supply zone. What kind of HLQ? Weekly. Okay. And this one is a monthly demand zone. Okay, what about the demand zone, weekly demand zone? We have a pierced demand zone on 11/3/2024. Now you know the importance of the pierced zones. All these days we ignored pierced zones. From now onwards we won't be ignoring. We will be looking for new order flows inside the pierced zones, or maybe the traps below the pierced zones. That way we will try to identify strong institutional order flows. So 11/3/2024, when it is? Sorry, pierced demand zone, not supply zone. Pierced demand zone, 11 March. So this is the one. We have a pierced weekly demand zone. The biggest problem is adding the text. Sometimes they are entering into the zones and create the problem. You might be thinking this one could be monthly, but so when it was pierced on elections declaration day, 4th, June 4th, we have seen such a huge drop, and after that market again sharply moved. So during this movement, is it created any new institutional order flows? See how sharply it moved. When it has to move such a sharp, a huge order flow has to be created in this area. That we will see only in the lower time frames. Maybe daily or 75 minutes we can observe. Meanwhile, is it having any complete demand zone? Yes, 13/11/2023. This is the one. This is below the demand zone completely. So we don't have any proper zone here. But compromised zones, can we draw? Yes, software can't identify, but we can draw. This is not really a big leg out. This is a medium size leg out. But here there is a base candle, some kind of action is happened. Just for reference purpose, I am drawing a weekly zone here, but to be honest, this may not be a valid weekly zone. But why I am drawing to reference any lower time frame zones are there? Why? See here, prices entered into this area and again started moving up. Definitely in this area, there is a good order flow, it might be there. And moreover, what kind of area it is? It is an area overlapped with the monthly distal line, lower time frame zone as an horizon to the higher time frame zone. Lesson 22 concept. There generally we have a very strong institutional order flows. That is the reason why, for reference purpose, I am drawing this rally, base rally. This rally is not a great leg out. This is a medium size candle. You can't use medium size leg outs, strictly speaking, but compromise it, and I am drawing. Sometimes you can compromise and draw the HTF zones. Not the lower time frame like 5 minutes level, you can't compromise, because they represent the real institutional order flows, the 5-minute zones. I mean fine-tuned 5-minute zones. There is a difference between 5-minute zone and a fine-tuned 5-minute zone. Hope you are all aware of the terminology. Fine-tuned 5-minute zone means it could be a normal 5-minute zone. It is not overlapped with higher time frames. But fine-tuned 5-minute zones means it must overlap. How? The 5-minute zone should be inside the 15-minute zone. That 15-minute zone should be inside the 75-minute zone. That 75-minute zone should be inside the daily zone. At least some 2-3 levels should be, minimum should be there. Of course, one level also a fine-tuned zone only. 5-minute zone inside 15 minutes. So 5 minutes is a fine-tuned zone. But more and more levels, the stronger the 5 minutes order flows. That is how you should understand. Okay, here we have a compromised weekly zone I have drawn here. Assume in this area, let us assume in this area strong order flow, because prices moved, came here, picked up the orders, and June 4th also on the election declaration, the huge fall in the market. This is the area stopped the crash and again pushed the market up. So here this is the area we have a lot of interest. Maybe the strong order flow in this area. In case next time prices are coming here, it may give another push. The possibility is there. But otherwise, the weekly zone is at present, it is not having any the price EMA confluence, and a weekly moving in a sideways range. If you look into the weekly trend based on lower lows, lower highs, higher lows, higher lows, it is almost equal trend at present. Maybe if it further goes down, maybe downtrend it will exhibit. Because this week is not yet completed. Okay, now let's move on to the daily time frame. So now we are in the daily time frame. Here we have daily EMA. See, now this is still, it is acting for the downtrend point of view. Daily trend currently is in moving towards the downside. Below the EMA 20 prices are moving. And now EMA is supporting for the short trades, not for the long trades. Until monthly overextension is completed, you will see downtrend in the daily only. EMA support you get only for short trades, not long trades. So any daily price overextension will result for completion of the daily price overextension will result short trades, but not long trades. Once the trend is reversed, when the trend will be reversed, if monthly overextension is completed, now prices will be started moving up. At the time, the daily trend is changed to sideways, from sideways again uptrend, and then rally will continue. So do we have any daily demand zones here? So let us take the help of NeoStock software so that we can identify any pierced zones which will give us some trade opportunities. So I am generating a daily supply demand zone chain for NIFTY. Okay, so these are the daily zones. Let's look into the recent daily demand zone, the 7th. This is the most recent daily demand zone. So what kind of characteristics it is having? It is a fresh zone, but violated opposing pivot, not a violated opposing zone, but leg out without follow through. All these are all somewhat negative factors about this zone, but still let us draw this zone 5/6/2024, because we will see any fine-tuned 5-minute zones are there. At least some short-term trade opportunities you may get. 5/6/24. Here we have rally-based rally. Is it 5/6/24? Yes. 5th zone 2024. This zone is created. Of course, we will get some hidden body. Even after getting hidden body, still it will result as a base candle, because you have upper wick is there. That is good enough to qualify this. Our software also qualified it is. It will perform all those checks. Okay, now let me change the color to daily zone. Let me add the label also. Daily demand zone. So is it tested? No. Now prices are somewhat close to this daily demand zone. Today's market is limited to a small range, small narrow range. Let us see. Now we have a drop candle. Now this is a base candle. Even if you add some hidden body also, still this is a base candle. Let us see. A few more base candles it will get, or tomorrow again sharply a leg out will be formed and a new supply zone will be formed here. Before price overextension, definitely institutions will created some supply zones. Or maybe there is another possibility, rally candle will be there, prices will be reaching up to this EMA, daily EMA 20. From EMA 20, again prices will be coming down sharply. Again panic will rise. People, all the televisions, all the newspapers, they say NIFTY is crashing, they will tell. But we know NIFTY is within the monthly zone. We won't get any panic. We just look for the opportunities that NIFTY is going to give. See, that is the difference between our way of thinking and other traders' way of thinking. Because we are clearly, accurately assessing the direction now, market direction. Okay, this is one daily zone, this is a fresh zone. Below that, any pierced zones? Yes. Here we have a pierced zone. It was earlier, it was tested 2 times. Let us focus on this, where exactly it is. This is the 12/2/2024 one base candle. Sorry, when it is 12/2, February 12. This is the one, not here. Yeah, here. We have a drop base rally. And this one was the low. This one is a lower time frame zone to this weekly zone, LTF horizon. That's why at this level, see here, prices reached and moved up. At that time, it would have given the lower time frame horizon. See, the zone was created, daily zone. After that, weekly zone created here by picking the orders from daily zone. After that, prices reached to the daily zone, which is overlapped with the weekly zone, picked up the orders and moved up, and next time also came close to this daily zone, very close, not exactly reached, but close to that, again moved. And on January 4th, what happened? Sharply all these weekly zone and daily zone both are pierced, and again finally prices came up and closed inside the zone. Probably in this area, maybe at 75 minutes or lower time frames, institutions might have created some order flow. Why? How I am saying? Because here you have a drop candle, you have a rally candle with a wick. Definitely near the wicks, you might be having some newly created zones. Many times these wicks, many times, I am not saying 100%, but many times, at least 80 to 90%, at wicks you will be having zones. Those zones will be having strong institutional order flows. We will see any new order flows are created at the lower time frame here. First, at present we have a pierced weekly zone and also a pierced daily zone, which is the horizon to the pierced weekly zone. While moving, institutions created any new order flows, we have to observe. Because in pierced zone strategy, you learn the third strategy. New order flows within the pierced zones. Okay, next, do we have any zone? Yes, we have a high liquidity zone here. That is also pierced. Let us see where exactly this high liquidity zone is there. The pierced. This is a 21/12/2023 two base candles. (21/12). Yeah, this is the one. Rally, two base candles and rally. This is a pierced zone. Why it is pierced? See here. Prices are completely pierced, and again see, while moving, institutions again created a rally base rally. The zone is pierced. Because it is pierced, somewhere in this area, definitely below the zone, you may see. Below this pierced zone, you may see some traps you will be seeing at lower time frame, maybe 15 minutes or 5 minutes, you might be seeing, or even 75 minutes. That we will see in the lower time frame. But after that, again rally continued. While continuing, a rally base rally is created. See, exactly within the pierced zone. What kind of pierced zone it is? It is a high liquidity pierced zone. See here. The ninth one, S_DZ. It is a support demand zone, high liquidity zone. Within the same area, see 24/1, a new zone is created. Rally base rally. At present, it is looking like a normal zone, but it is a very powerful zone because it is created again within the pierced zone area. This entire zone is within the pierced zone. But is this zone again a pierced one? No, it is not a pierced zone. See, it is already tested 2 times. How powerful it is, pierced zones. That is what you learned in lesson 28. When institutions creates new order flows within the pierced zones, those order flows are very strong. That's why it is already tested 2 times. Who knows? 3rd time also it may test next time if prices enter into this area. So that is the reason why let us focus on this zone. And moreover, this zone is exactly within the pierced zone. So no need of keeping this pierced zone. The only thing, look for any traps are there. Bear trap is available below this zone. That is the only thing we remember. So now I am adjusting this zone up to this. This is a fresh zone. This is a daily zone. Daily demand zone inside the pierced daily HLQ. This is because that is very important. This HLQ demand zone is a pierced demand zone. Let us keep that. This demand zone. So that way we know this zone is very powerful. Twice it is tested when, see here, prices went and again came down, picked up the orders, and again a good rally it has given. After that you see on June 4th, see this is the June 4th candle, elections declaration day. On that day, prices entered into this zone, daily zone. Why this daily zone worked very well? Because this daily zone is created inside the pierced high liquidity demand zone. Only this zone stopped the crash on that day on June 4th. Why not the other zones? Here all the zones are gone, right? You have a drop base rally is there. This is a hidden zone. This is gone. And here you have one more drop base rally. This is also gone. Pierced zone. But why this rally base rally worked? Because this newly created zone is inside the pierced zone. The newly created zones inside the pierced zones, mostly they have a very strong institutional order flow. That means the high liquidity effect this zone will absorb, even though it is not displayed as a high liquidity zone, because it is inside high liquidity zone, it absorbs that power. Because that much huge order flows institutions added. Because of this zone, that day the crash is stopped on 4th June 2024. Our elections results declaration day. See, such a big candle. How many points Nifty was down on that day? 1,379 points Nifty was down. This is 5.93%, close to 6%. Nifty is down on that day. But this zone gave good profit on that day. See, from here prices sharply moved up. Next day prices again sharply moved up. Next day prices moved and the rally continued. If you might be knowing HLQ zone pierced based strategy, the pierced zone strategy on June 4th, maybe you would have purchased Nifty 50 on that day. But you landed only just a few weeks back. 2 weeks back only you land our pierced zone concept. The strategies you land. But don't worry, we still get a lot of opportunities. Market always provides opportunities, but you need to identify those opportunities. That's why today we are analyzing even by using pierced zones. Okay, fine. This is the area we have a pierced zone, and moreover, inside the pierced zone, a fresh zone is created. And this fresh zone is inside the monthly zone and also inside the weekly zone, but weekly zone we compromised. But we identified a fine-tuned 5-minute zone inside the pierced daily zone. So it is having zone confluence, weekly and monthly zones. Okay, this is about daily time frame. Now let's look into the 75 minutes time frame. From now onwards, we don't require pierced zones because the last time frame for pierced zones is daily only. 75 rarely you take if it is a high liquidity, but let us don't get into 75 minutes. So let me manually draw the zones without looking to supply demand zone chain. So now let us look for fine-tuned zones in these order flows. Okay, first let us look into this daily zone. Is it having any fine-tuned 75-minute zone? Let us identify. See here at the hidden body, this is a rally candle. You have 1, 2, 3, 4 base candles, rally and follow through candles. So that way I am drawing 75-minute zone here. Let me change the color to 75 minutes demand zone color. Okay. This is the 75-minute zone. I am not adding any labels. Please remember when I am explaining these concepts, you also start drawing parallelly. You pause the video, draw these zones in our charts so that it will be ready. This is the best way to practice and also best way to prepare for future trades point of view. See, after I complete this, I won't delete this analysis. It will be there. After 1 week, if I open, you will see this analysis in my charts. And remember, currently I am focusing only on the monthly demand zone. But when you analyze, you have to analyze both the sides, demand and supply. Because our focus is at present only on yesterday, whatever the statement I send it to you in our Telegram channel, I am focusing, I am stick to that statement. When Nifty is about to complete its monthly overextension, how we can find long opportunities. Okay, here we have a rally as a leg-in, you have base candles and a rally. Of course, if there are any high liquidity 75 minutes within these areas, you may get trade opportunities that we will see next time when we generate our high liquidity zones. But at present, we will focus inside these daily zones. Not the other areas I am focusing. That's why I am not referring Nifty, Bank Nifty, supply demand zone chain also. I stopped it up to daily time frame. Okay, this is a 75-minute zone. Any other 75-minute zones we have to look for? Yes. When prices are moving up, we have a daily zone here. This daily zone is an horizon to this 75-minute zone. Of course, both are pierced zones. Within this pierced zone area, any new 75-minute zones are created. Let us look. Yes. This is a bigger candle. We can consider this as a leg-in. These two are as a base candles and a rally candle. So a 75 minutes new zone is created. See, this is from where it picked up the orders. Within the daily zone. This is the daily zone. This is the horizon to this weekly zone. So entire zone is there inside the weekly zone, but the order flow is from the pierced zone. That area. That means institutions spread the order flow within this daily pierced zone as well as monthly pierced zone. Origin is daily pierced zone. So this is the new order flow you have to identify, focus. So let me add a text here so that you will understand. This is a 75 minutes demand zone within weekly and daily pierced zone. Because you should remember this text. Then only you will understand why we have drawn this zone. See here, small wicks is coming from pierced zone. That means here a lot of order flow might be there. Maybe lower time frames you may see some order flow somewhere here. The lower time frame zones might be overlapped with this daily pierced zone. Of course, this entire daily zone is part of this daily zone is inside the monthly zone. See the monthly distal line, this one. This is a daily proximal line. Exactly in between, you have lower wicks are there. See institutions how cleverly they are placing their order flows. Because they are the piercer zones, we don't look into the zones. Their order flows won't be disturbed. That is the way institutions will be feeling. But we are aware of their concept. With the help of piercer zones, we are identifying the new order flows. That is the reason why we have drawn these piercer zones. Now, after that, now if you want, you can delete these zones now. But still, any traps are there below this, any things in 15 minutes or 5 minutes, that we will see. Okay. There may not be any trap between these two zones because prices went very deep inside. If at all anything, the order flow will be there here. We have to assume those order flows are traps to this. But anyway, they are already going to be fine-tuned zones inside this daily zone. This daily zone is a LOTL zone to the piercer zone. Within same time frame, if two zones are overlapped, we call it as a LOTL, right? So this daily zone this is not a violated zone. This is a tested zone. This daily zone is overlapped with piercer zone. Okay, now any other order flows within these daily zones that we have to understand. Already 175 minute zone identified here 175. And what about this 75? Here also. This zone is not failed. And here we have a drop base rally and follow through candles. You can draw a 75 minute zone here. And also observe, we have a rally base rally. This 75 minute zone is an horizon to the monthly zone. If you convince this is the failed ERC candle, this zone, because this is a large candle, so definitely we can consider this as a rally candle, base candle, and again a rally candle. This 75 minute zone is the horizon for this entire monthly. See, this is the monthly zone. From this horizon, the monthly orders are picked up, monthly zone orders, and then the entire monthly zone took place. The zone is formed. Initially, it picked up the orders from this area. That way, we will give 75 minutes LTF to the daily zone. Let me add a text so that you don't forget. 75 minutes LTF to monthly HTF. Here LTF means lower time frame. Actually, we should not use LTF. We have to write lower time frame zone to monthly higher time frame zone, or simply you can write 75 minutes horizon instead of writing lower time frame. By using the word you will understand. By using the word horizon, monthly demand zone. This is better, much better. Okay. So this is how now we identified 75 minutes order flows. All these are all three are fine-tuned order flows, and fourth one is the not fine-tuned but is a horizon. Okay, now let's go to the 15 minutes time frame. In the 15 minutes time frame, do we have any 15 minutes order flows here? Yes. We have a drop base. This is not a big candle. Not convinced with this drop base rally, but this is a rally base rally. This is perfect. This is the one. This is 15 minutes demand zone. Rally base rally. Drop base somehow. Maybe both candles together you can consider, but this is already fine. If it is a 15-minute zone, okay, this is 15 minutes only, right? You can compromise and draw 15 minutes zone, no issues. 5 minutes level compromising is risk, but 15 minutes. Inside, if you have a proper 5-minute zone, then definitely this order flow will be a good order flow. This one I have compromised and drawn 15 minutes. This rally base rally, perfect, 15 minutes. This is within the most recent daily zone in the monthly time frame. If the 5 minutes order flows are not there, for example, not strong, mostly this zone will be violated. That we will see later. But what about this? This is a 75-minute zone within weekly and daily piercer zone. So this is very important. Are there any order flows in this area? Yes, we have a rally to base candles and rally. That way you can draw. Maybe you might be thinking medium size leg candles also. That possibility is there. But anyway, oh sorry, this you might be having doubt. But here you have, see here, drop to base candles and rally candle. You have a drop candle, but this is a failed ERC. You can also consider this as a rally candle. Failed ERC, you have a big wick. You have a big wick is there. So you can consider drop base rally, rally base rally. Or if you convince this is a drop, till the lower wick you have to draw the zone. So let us draw till the lower wick. This is the 15-minute zone. Drop base rally. From this area again mode. Because this is, we have some doubts to consider this as a base candle, because definitely the body is close to 70% or maybe 65% body will be there. Anyway, this order flow is within this 15 minutes area. Next we will see in 5 minutes. If 5 minutes, any 5-minute zone is there, that comes under this area. At the time we can draw. If I draw wick to wick, we can see up to this candles we are getting. Let us see. This is the within the newly created zone, inside the pierced zone. This is a 75-minute zone created inside the pierced daily zone. This daily zone. Of course, weekly zone also. The new order flows. And what about here? This daily zone is inside the pierced daily high liquidity zone. Yeah, you have a perfect, you have a drop base rally. The moment you hide the gap, you will see. See? You have a drop base rally. So let me draw next 15-minute zone. Okay. And what about here? You have 75 minutes horizon to the monthly zone. Is there any 15-minute zone within this area? Let's verify. Yes. Here you have a rally base rally, but this rally base rally, is it a big candle? No. What about wick? You have a, yes, it is a big candle. So let me draw such a big, let me make it type 2 proximal. So let's see, from here it picked up and again moved up from the 15 minutes. So we should have a fine-tuned 5-minute zone somewhere here. If that is there, then this is going to be a strong institutional order flow. See here, it came close to the 15-minute zone and picked up the order. Because I have drawn type 2 proximal. Now let me draw week to week, you will understand. Rally base rally. Now you see, monthly is picked up the orders from 15-minute zone, and then the entire order flow is started moving up. So this is the horizon. This 15-minute zone is the horizon for this entire monthly zone. Monthly zone picked up the orders from this 15 minutes horizon. Of course, this 15 minutes horizon is inside the daily horizon, inside the 75 minutes horizon. But daily zone is not there. That's okay. It doesn't matter. If daily zone is also there, this is going to be a fine-tuned zone that could have been even much stronger order flow. But already this is a fine-tuned zone inside the 75-minute zone. Okay, this is about 15 minutes. Now let's go to the 5 minutes to find the real institutional order flows. Okay, now let's go from bottom to top now. The lowest order flows first let me analyze, and then go to the nearest to the current price. Is it having any fine-tuned 5-minute zone? Yes. It is having a drop base rally, a fresh zone. It is not yet tested so far. This order flow is much stronger. But this color, let me add some extra thickness so that we can recognize. Okay. So the much thick green color indicates the 5 minutes order flows. Now remember, this is the 5 minutes zone. This is the origin. While picking the orders, the prices did not travel up to 5 minutes. That means here itself we have a strong order. That means already they spread the orders from here to until here. That's why the entire monthly order flow started moving up. But when you want to take next time short-term trades, you need not wait until 5 minutes zone. You can take before itself. But if you are planning intraday trades, you have to wait until prices reach this fine-tuned 5 minutes level. Otherwise, risk management is very difficult in intraday. But if you are a short-term trader, you can take trade before itself, but you won't exit the trade during the intraday. You will look for a bigger targets. Okay, this is the from the origin, and here we have zone 4th, the order flow picked up from this zone. Zone 4th. Where is the zone 4th candle? See here, zone 4th candle is picked up from the 15 minutes fine-tuned zone. See, this is the 15 minutes fine-tuned zone. But do we have 5 minutes fine-tuned? If 5 minutes fine-tuned is there, is it fresh zone? That you have to identify. And remember, observe carefully. Institutions again created a drop base rally. The 15 minutes, this is a 5 minute zone. That means if you have a fine-tuned 5 minute zone, this could be a LOTL zone. Mostly this zone might be working like a high liquidity 5 minute zone. Which one? The one we are going to fine-tune. Because the last time on zone 4th it was tested, institutions added a new order flow in that area. They might have added a much bigger order flow on that area because due to the crash in the market, to make the market move up in the fine-tuned area, probably it's better to take trades from the fine-tuned area. See here, this entire 15 minutes area, we have drop 1, 2, 3, 4 base candles and rally. If you draw entire 15 minutes area is a 5 minute zone. Type 1 proximal. So type 1 proximal is already tested. But type 2 proximal point of view, two options. If you consider this as a rally candle, big candle, and here order flow is there. Why order flow is, we are saying, because prices moved in a narrow range here. There is a balance here. After that, the imbalance started from this candle. Probably this is the actual institutional order flow. If that is the case, this should be a rally candle, two base candles and a rally candle, rally base rally you have to consider. If you draw like this, what will happen? You have a big order flow and your risk management is very difficult. So if 5 minutes point of view, we can manage like this, but 15 minutes point of view, the entire zone, here is the distal line and here is the proximal line, 15 minutes. Okay. So this from this area, let me expand this. This is what happened on 4th June on elections declaration day. See, from this area, it picked up the orders. Again, institutions created drop base rally. So next time prices may not reach up to this fine-tuned area. If that is the case, you need to combine. Then if that is the case, you have to plan your trade here and your stop loss will be below the fine-tuned 5 minutes distal line. How can we say? Because it's June, they might have added a huge order flow in this area. Sometimes you will be missing a trade. Either you take here or you keep entry buffer and at least you take somewhere here. But it's up to you. How we are managing. So I'm deleting this line. But remember this point. Okay, after that, the newly created 75-minute zone. Is there any order flows? Yes, we have two order flows. Drop base rally. And where is this new order flow drop base rally? Inside the 75-minute zone, and that 75-minute zone is inside the daily or weekly pierced zone. This is the new order flow inside the pierced zone. We have two new order flows. You have drop, two base candles and a rally. This is what? Risk management point of view, you can limit up to this area. There is one more rally, base rally is there. If this is violated, prices will come. By the time demand will be weakened. And from here definitely your trades work very well. Because rally, base rally is also there. If you add both, it is like a LOTL zone. We have a drop base rally, rally base rally, LOTL. Risk management is very difficult for you to handle. For intraday trades point of view. Short-term traders, you take a trade from the 15-minute zone. Because you have multiple order flows, you take a trade and this will be your stop loss. That way you will try to handle that. If risk is high, you will position size your trades. Okay, and this is the recent to the current prices. This demand zone. The demand zone on 6th June. Let us check the order flows here. We have a rally, base rally is here. And if you want, you can make this up to the, that way you will adjust your entry to manage the risk. You will not be taking a type 2, a little below type 2. At a 15 minutes level, you take the trade, 15 minutes proximal line, but distal line is this 5 minutes distal line. But you have a risk if you do. Sometimes prices may not reach, before itself it will be started moving up. That possibility is also there. So that's why up to you, whether you take a trade here or a little below to manage the risk. And what about this? This is a question mark to me. This is not a base candle. It is looking like a failed ERC candle. Clarity is missing here. Clarity is missing. What I can do, let me go to the 3 minutes time frame so that this also I can adjust properly. Let me go to the 3 minutes for the fine tuning these two zones, because 3 minutes could be a supplement to the 5 minute zone. It's not the replacement, but supplement when 5 minute zones are not very clear. See here in the 3 minutes. Oh, this is perfect. See here. We have a drop, 2 base candles and rally. Sorry, this is inside 75 minute zone. I am analyzing the wrong one. This is the area. Three minutes structure is not good here. I think this is the one we need to consider. We have a drop, failed ERC, base candle, medium size leg, part of the base. Maybe this is the perfect one. Type 2 proximal. Okay, because this is 3 minutes, up to type 1 proximal we will add. See, prices were trying to pick up the orders from this 3 minute zone. Maybe this is the area we have a strong order flow. Look into these candles. Further, next candle low came very close, almost, it didn't touch, but almost about to touch this type 1 proximal of 3 minute zone, and then sharply moved up. Probably this is the area strong order flow, because here order flow structures are not good. And what about here? Now you see clearly it is visible. This is a drop candle, failed ERC candle, big candle, rally candle, in between no base candles. That means no 5 minutes order flow. So this is the area we can't plan our trade. This will be easily violated. This is the area we can plan a trade. This is the only one thing, but remember, it's not actually very clear, this one. 3 minutes level, okay, some extent. If 5 minutes clarity is there, that will be perfect. But at least we are seeing these candles, rejections, small rejections before the zone. Based on that, assuming this zone might be having strong order flow. That's it. Okay. Now let me go to the daily so that you will see this entire structure. This is what we did analysis. The immediate opportunity here is inside this daily zone. This 3 minutes fine-tuned zone is the valid, and this is not valid. 15 minute zone is not having a 5 minute zone. Suppose you are planning short-term trade, you may take a trade in the first one, but your stop loss will be below this. Because this is the 15 minute zone, entire thing is 15 minute zone. But if you are planning intraday trade, you have to ignore the first 15 minute zone. Second one only you have the institutional order flow. And next, this is the one probably we can bet in this area. The reason is this 75 minute zone is created inside the pierced daily zone as well as weekly zone. See, this weekly zone is a pierced zone. This daily zone horizon to the weekly is also a pierced zone. Now on June 4th, the market was started moving up between 4th and 5th June. Now institutions here added a new order flow, and see how sharply prices moved after they added this order flow. And here you have a daily demand zone inside daily high liquidity demand, pierced demand zone. And this daily demand zone, rally base rally, is a tested zone. Twice it is already tested. Still it is having a fresh fine-tuned 5 minute zone is there. Still that order flow is not tested. Maybe next time prices again reach into this zone and pick up the orders, and strongly it may move up. That possibility is there. Possibility. And more, our monthly zone is having a trap, the 5 minutes trap. which is a little below the monthly zone. Where is the monthly zone is getting ended? Here. See, you are seeing the dot, right? This is monthly zone distal line here. This round color one, that is the distal line there. And the fine-tuned 5-minute zone is below the distal line of monthly zone. That means this will act as a trap. Of course, this is also a lower time frame zone to the horizon, not the 5-minute zone, but this entire 75-minute zone, and including even 15-minute zone. And 5 minutes is a fine-tuned in that 15-minute zone. So that way you can consider this 5 minutes order flow is also lower time frame horizon, fine-tuned lower time frame horizon inside 15 minutes horizon. That 15 minutes horizon is inside the 75 minutes horizon, because both are overlapped with monthly distal line. So this is how you should understand this monthly zone. I didn't focus on the supply zones, only weekly zone I have drawn here. You have some high liquidity zones. Every day I am generating Nifty and Bank Nifty supply demand zone chain. So please refer there. Those high liquidity supply zones, a daily time frame or 75 minutes time frame you can draw, and then you can prepare your short trades also. If prices are retraced up to this daily demand zone, we have a daily demand zone, there you can go for a short trades, because until monthly overextension is completed, probably this daily, until the monthly overextension complete, this daily EMA will be acting for the supply zones as a short trades. After that, prices will come down and daily zones will be moving up. At the time existing supply zones will be violated. That way daily trend will be changed. Once daily trend is changed, prices will be started moving above the daily EMA at that time. At the time EMA also further come down. Daily EMA. Remember, there is a lot of price action has to be done to complete the monthly overextension. We just identified early. Monthly overextension is going to complete very soon, but it takes some time. But remember, monthly zone is already tested yesterday. See here, this is the candle, tested the monthly zone. Definitely some movement will be here, going up before again falling down. Let us assume prices entered out until this daily EMA line. Now newspapers, television channels, everybody will be started saying, now again market is falling, market is falling. At the time you need not panic. You know that now monthly overextension is going to end. That is the way you have to understand. If there is some movement towards the up for the next 1 week or that way, we should not understand market is moving up. Or again falling, when television say market is again falling down sharply, if they are saying, you should not panic. Now our extension is nearing to the end. That is the way you have to understand. So this is the monthly demand zone analysis. Monthly supply zones I did not complete. You have to do that. Okay. So this is about today's session. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.